I'm Jaylen Brooks, and I'm thrilled to be joining you all today as a financial expert. We'll be delving into the intricacies of Team stock, a fascinating case study in today's market. Currently priced at $276.72, Team has seen a recent dip from its previous close of $287.5. With a market capitalization of $72 billion, the stock presents a unique opportunity for investors. Now, looking at the data, it is interesting to see a negative earnings per share of negative $1.47. The stock's 52-week range from a low of $135.29 to a high of $287.97 further adds to the intrigue. So, Nia, what are your initial thoughts on Team, given its recent performance and the broader market trends?
Well, Jaylen, thanks for having me. Looking at Team stock, the negative EPS of negative $1.47 definitely catches my eye. It suggests the company isn't currently profitable. However, the substantial market cap of $72 billion indicates strong investor confidence, perhaps based on future growth potential. The wide 52-week range also points to volatility, which, could be a double-edged sword. I'd like to hear your take on how these factors interplay with current market conditions.
Well, Nia, you're spot on about the negative EPS and its implications for profitability. However, let's not forget that Team operates in a dynamic, high-growth sector. A negative EPS isn't uncommon for companies prioritizing expansion and reinvestment. The $72 billion market cap, as you pointed out, reflects this growth narrative. Investors are essentially betting on Team's future, not its present. Now, the volatility reflected in the 52-week range is indeed a crucial factor. It suggests that the market is still trying to price in Team's long-term prospects. This creates both risk and opportunity. The recent price drop to $276.72 from $287.5 could be a market correction, or it could be a sign of more fundamental concerns. The key here is to carefully dissect the underlying data to understand what's driving this volatility. So the 21% year-over-year revenue growth shown in Table 47 is a positive sign, suggesting increasing demand for Team's products or services. But the substantial increase in provision for income taxes, a whopping 347% jump as indicated in Table 57, raises questions about the company's tax strategy and its potential impact on future earnings.
Jaylen, I think your point about the revenue growth is well taken. That 21% year-over-year increase from Table 47 is definitely encouraging, especially in the current economic climate. It does sort of suggest that Team is gaining traction in the market. However, I'm still a bit uneasy about that massive jump in the provision for income taxes. A 347% increase, as shown in Table 57, is a huge red flag for me. It makes me wonder if there are underlying issues that haven't been fully accounted for. To be honest, it could impact investor sentiment significantly. Also, the lack of a price-to-earnings ratio makes traditional valuation tricky. So, based on the current data, my 3-month prediction is around $265, 6-month is $275, and 12-month is $290. Given the volatility and the tax situation, I'd lean towards a hold recommendation for now. I'd be curious to see how this plays out in the next quarter's earnings report.
Nia, I appreciate your analysis, and I agree that the provision for income taxes warrants further investigation. A 347% increase, as shown in Table 57, is definitely something to keep an eye on. Your price predictions of $265, $275, and $290 for the next 3, 6, and 12 months, respectively, seem reasonable given the current data. I concur with your hold recommendation for now. The lack of a price-to-earnings ratio does complicate valuation, but the growth story, supported by the 21% year-over-year revenue increase in Table 47, is hard to ignore. So, to summarize, Team stock presents a compelling case study for investors willing to navigate some uncertainty. I believe Team stock is a hold for now. Thank you for joining us on Channel 41, and don't forget to like and subscribe for more insightful stock analysis.